afternoon, guys. Today's going to be a little bit of a different video. Today I'm going to talk about how I filled my ISA in 1 year and how I plan to continue filling my ISA year on year. And I'm going to do all this while riding a bike, I think. Let's see how that goes.
I'm amazed how many people own stocks. I'm amazed how many people own stocks. The sucker's going up.
Welcome back everyone, my name's Paul. Now, today I want to talk about me filling my ISA because it's a massive achievement for me to do this. Saving and investing is a brand new thing to me. I was never brought up like that. I've never done it in my life. So having 20,000 in the bank plus now it's capital appreciated as well, and plus the dividends. Now I have a real amount of money that I don't think I've ever seen before in my life. And even though I've only been doing this year, I've learned a lot. People think that in order to invest, you need to grow how much you earn. And it isn't necessarily the way. Sometimes you just need to cut your expenses, especially when your earning ceiling isn't that high. And I managed to figure out that there's really only 3 important factors to investing: building your base, having emotional control, and knowing your risk. And notice there I didn't say anything about stocks, and I didn't say anything about PE ratios or price to cash flow or building businesses, anything like that. Because when it comes down to investing, when you don't earn that much and you don't come from a privileged background, it's really more about compounding. And I've spoken plenty of times about emotional control and knowing your risk, and I'm going to talk about it a lot more in the future as well. But today is all about building that base and exactly what I mean by that. So let me continue riding for a bit, find another location, and I'll continue it there. And honestly, once you've figured out the risk that you're willing to take, building the base seems to be the most important thing. I've heard this from traders, I've heard this from long-term investors. Everyone needs to have that base, and everyone who's into any form of investing at all needs to save. And this is crucially important right now because the lockdowns and things seem to be coming to an end. And the Bank of England has realised that a lot of people out there over the past couple of years have become accidental savers. Because we haven't been allowed out to go to restaurants and go to sports events and do all sorts of things that we used to do, we've managed to hoard a little bit of money. Some people have chosen to put it into investing, and if that's right for them, that's perfect. But a lot of people have just put it into savings accounts or cash ISAs, earning 0.01% of interest. That's way behind inflation, and it's expected that when all the lockdowns are over, everyone is going to start spending some money. And it's going to be very tempting to go out to restaurants or go see a really expensive show or buy that Lamborghini you've been wanting to buy. And it's the same for me. I think lockdown has really helped me save quite a lot. It's helped me save like over 20 grand. And it isn't just being in lockdown that has made me save so much. I mean, not a lot has changed for me in lockdown because I still go to work exactly the same. I don't really do anything different to what I used to do. I might have changed a little bit by not being able to go out to restaurants and stuff, but overall, there's not much difference. But myself and the missus have made a lot of big changes which has allowed us to save a hell of a lot of money. And here we are. These are the biggest changes we made to save us, well, to be honest, well over 20 grand. First, we did a financial review. Now, this sounds as simple as anything, but to be honest, people forget about it. And so did we. And when we first looked into our finances, we really sat down and went through a month and figured out how much we spend on stupid amounts of food and stupid items from Amazon. Once we sat down and figured all that out, whoa, we realized we had a lot of places where we could easily cut out spending. I mean, I went to McDonald's a ridiculous amount of times a month, and now I don't do it so often. We've saved so much money. Really sitting down and understanding what you spend on things like food, and food was our biggest one. We've chopped our food budget down from £600 a month right the way down to £350 a month. And to be honest, we haven't really noticed a difference. In fact, it's just made our lives easier. That's an extra £300 a month just to go back into savings. Or, you know, if we want to, we kind of treat ourselves a little bit. Next, we made some sinking funds. Now, this isn't as important to me, but it has been a lot more important to the missus. She praises these sinking funds, and oh my god, she just thinks her life is so much better with them. Sinking funds are little pots of money that you build up to spend on things that kind of just reoccur every single year. So car payments and insurance and childcare fees and any other yearly fees that you end up spending, if you save for them over the course of the year, when it comes round to it, that payment's not so bad. And it hasn't really saved us any money specifically, but it's made us think about money differently. And the weight that it takes off your shoulders, for us personally, is incredible. What we've done is we've set up little pots of Monzo. So we've got a holiday fund in there, we've got a kids fund in there, we've got a giving fund in there, just in case we end up having to give to charity. I'm really going to try and give to charity. I'm still not there yet. I'm still not there. I'm trying. But we set a target for those pots, and every single month we put a little bit of our money into those pots, and we just don't have to think about those payments when they come round again. The third thing we've done to improve our financial life is taking time to think about something before we buy it. That's probably not a very good description of it, but we're basically delaying the gratification on any purchases we might want to have. So for instance, we currently want a new dining table, but we don't want to pay the money for a new dining table. It's just a piece of wood that we want to sit and eat on, so we want to get it for the right price, but we also want it to look good to go with the house and blah 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 blah. And with any purchases like this that we've made in the past where we don't need it right away, but we would like it anyway, we've always found that if you just wait long enough, the perfect thing comes up on Facebook or eBay pretty quickly. Honestly, behind the sinking funds and the financial review, this has been one of our major saving points. Just taking your time. If you want to buy something, hold off 3 days. When you hold off 3 days, you really think about whether you actually want the thing that you're going to buy. But finally, the most important thing that I've changed in my life to help me save a full 20 grand into my ISA is that I've learned to pay myself first. It's really very simple. Every time my paycheck comes in every single month, rather than waiting for the bills to come out, I pay myself £1,000 straight away, and that goes straight into my savings. Then from the money that's left over, I need to figure out how to pay my bills and then budget myself so I can live off the rest of the money. I know this sounds complicated, but it really isn't. And once you've done it for a couple of months, your life changes, man. It really does. And now the lockdowns are coming to an end, I could be tempted to go back out and go back to my old ways, going out to restaurants all the time and spending money on things that I don't necessarily need to spend money on. And I'm taking steps for myself right now to try and not fall back into that hole. Today I'm out here on this bike ride because I'm trying to train myself to commute to work. It's about a 2-hour bike ride, but I figured if I can do this even just 1 day a week, I save myself about 50 quid a month in fuel and far more on car maintenance probably. It's all in the attempt to eventually not need a second car. If I can get rid of that second car, I get rid of a huge debt. And that will eventually make it much easier and much quicker to me just not need a car at all to go to work, because I might not need to go to work eventually. It's hard work though. If there's any cyclists out there that are watching and want to help me out with my bike, I've got a pretty old bike. I can't even remember buying it, to be honest with you. But it runs pretty good. If there's anyone out there that knows how to make this bike faster or just easier, I don't know, by maybe changing the tires or something like that, let me know in the comments below. I need to get back on and move because I think I'm about an hour from home right now. And it's worth pointing out right here, I'm not here to do this frugal thing. I still lead a pretty normal life. I just try to cut out the crap. You know, I pay for loads of sports stuff. I eat some nice food every now and then as well. And we plan on going on holiday as much as we can over the next year. I'm just trying to start to plan ahead, which makes things a lot easier to do. This cycling thing is not just about saving 50 quid a month. I've been getting seriously fat over the past couple of years, and I need to do something to knock off some of this timber. I literally don't have any time in the day to research, to exercise, to record videos. That's why I'm doing this at the same time as trying to do this cycle. So while my commute to work is 30 minutes by car, if I can convert that to an hour by bike, I essentially get an extra half an hour of time to get some exercise done. I get to listen to a podcast on the way and get some research done as well. And finally, I get to save some money. Triple purpose. I'm just trying to be much more efficient, and while this might not last forever, I might get really bored of it in the first couple of weeks. At least I'm trying, and at least I'm trying to better myself and try and take better control of my finances and, most importantly, my time. Okay, here we go, portfolio time. Currently, I have deposited all the nines. £19,999 is what I've deposited into my account. This is over the course of 2020, and we've still got about a month to go. And currently, my account value stands at 22,760. I know it might not be as good as what a lot of people have done this year, but my portfolio is a dividend reinvestment portfolio. It's designed to be a lot more conservative, and it's designed to be a little more safe. Especially while I'm in my early years of investing and I really don't have a clue what I'm doing. It's currently a Sunday, so all markets are closed. What I want to try and talk to you about today is how I'm going to try and rebalance my portfolio and maybe refine it into a little bit more of a portfolio that's about me and the way I see dividend reinvestment rather than the traditional style of dividend reinvesting. For instance, recently I got rid of Coca-Cola and McDonald's. This would surprise a lot of dividend investors. Coca-Cola and McDonald's are what we call dividend kings or aristocrats or champions, one of them three. I don't really care too much about the titles of how often they've paid dividends out. What I care about is how good the fundamentals of these companies are and how relevant they'll be for the future. Coca-Cola and McDonald's aren't as good as what we first thought they were. McDonald's in particular is losing revenue, and there is heavy competition from that cheap, well-known fast food restaurant type of market. There's lots of new brands coming on board, and even Chipotle has now started releasing the Chipotlanes. McDonald's is really going to suffer when it comes to these innovations in the fast food industry. Fast food is about to get healthier, better, cheaper, faster, all those sorts of things, and McDonald's might not have such a strong market share when it comes to the future. Coke's not far off either, but the reason I sold Coke, like McDonald's, is it's particularly overvalued right now. When I'm dividend investing, I don't just want the dividends. I'm going to talk about that in a future video, I think. Dividends aren't the be-all and end-all, but the reason why I select dividend-paying companies is because they're generally a lot better for paying back to shareholders. If the companies are still massively overvalued, like McDonald's and Coke are, then it's possible that you could be sacrificing capital appreciation in favor of these dividends. And that is not what modern dividend investing is all about. I've personally chosen the dividend reinvestment strategy because I kind of understand how the compounding works there. It's much easier for me to understand what returns I'm going to get rather than investing in growth companies where I just don't have the ability to pick them very well. Not yet anyway. But I don't just pick these companies for the yield and how much I'm going to get in dividends. I'm also trying to buy these companies when I think they're undervalued. Companies like Avalon Bay Communities, which is a REIT that I think has really got its finger on the pulse of the movement of work from home. I think it's going to be one of those undervalued work from home kind of plays where people are going to start looking for apartments that really cater for what they need to work remotely. And Avalon Bay seem to have this down. And I do believe I bought them while they were undervalued, and they probably still are. Broadcom is one company I bought very recently. Cash flow is very high in Broadcom, and I believe that this company's share price is not reflective of that yet. I think Broadcom has got a long way to go in capital appreciation, and oh my god, that dividend is so well covered by cash. Remember, cash is so important to dividend paying companies, not payout ratio, not freaking price to earnings or anything like that, cash. Remember, if a company has very high cash flow, it's very possible that it's a very good dividend paying company. I currently have 28 investments. A lot of those are ETFs, but I do think I'm probably spread a bit thin. There's a couple of companies in here that I would probably like to reduce down. I'm starting to feel now that I can kind of pinpoint the companies that I really want to invest in. These are companies that I think are a little bit lower risk, they have high cash flows, and they pay back to shareholders. That's just the way that I want to invest. It's not likely to make you rich quickly, but I'm in the business of getting rich slowly. While I'm still very new to investing and very early in my investment journey, I'm in the business of building my base, controlling my emotion, and knowing my risk. I almost forgot the third one then. So thanks very much for watching, guys, and thank you so much for being with me over the past year. This year has been absolutely incredible. It's been so crazy, and I can't believe I've managed to save this amount of money. I can't believe I've managed to make these amazing changes in my life that has allowed me to get on this little bit of a path to work optional financial freedom. I don't know what to call it. It's just, I just want a little bit more money to make my life easier. And by the way, none of this has been paid for by YouTube. I don't earn that much from YouTube, and most of it all stays in a bank account somewhere for me to reinvest in the company. The camera and everything that I'm using right here, all the software and all that sort of thing, that's all been paid for by YouTube. Everything that I earn from there, it gets reinvested back into this thing that I'm doing. I haven't got a clue what I'm doing, to be honest with you. And I'm trying to prove that you don't need to earn a lot of money to save a lot of money. And if we just take our time with our finances and figure out what we want to do with our money and what's our goal in life, maybe we can make some changes. Thank you very much for watching, guys. The investment app that I use is called Trading 212. If you wanted to sign up and get into investing, you can sign up through a link in the description below. If you sign up through that link, you get a free share and I get a free share as well. Also, I use eToro to buy my Bitcoin and do a tiny little bit of trading on the side. If you wanted to sign up to eToro, you can really help the channel out by signing up to a link in the description below. Also, if you wanted to absolutely completely live your life around investing, you can join our absolutely free Discord. There are loads of people in there all talking about stocks all day, every day, and it is so helpful in there when you've got a question about, I don't know, tax or investing or valuing a company. There are so many helpful people in there. Also, check me out on Instagram. I've been going through a phase on there where I've been posting memes, interesting memes. Not everyone finds them funny, let's just say that. But if you want to get on there, I post there weekly about memes, I post there trading, and I post about little bits of my life as well. I tell you what, I'll even post a little photo of what's going on right now. There we go. Thank you very much for watching, guys, and if you enjoyed this video, please feel free to like, subscribe, and invest. Oh, I've got to go ride a bike. It's going to take me hours. See you later.
I'm amazed how many people own stocks. I'm amazed how many people own stocks. The sucker's going up.